Well, the deal space has been relatively quiet for nearly a year, especially for tech, but things could be picking up back again soon. Joining us now to break down what's on the docket is Yahoo Finance reporter Allie Garfinkle. Allie, what are you watching?
Rochelle, after a long silence, tech deal making could really be making a comeback here. I've spent the entire week talking to a bunch of banking sources that I have, and all of them are saying that conversations that stalled even 3 months ago are now returning. They're back in the last 2 weeks where people now want to start making plans, firming up dates to either take an asset to market or go buy. And there are a couple of things that are sort of leading into this. The first one is the economy, the belief that there is macroeconomic stabilization sort of in the heading in right now, right? There is a belief, of course, for instance, among deal makers, of course, we'll see if it's true, that interest rates are stabilizing. Now, I think the way I would explain it is this, in real estate, the conventional wisdom is location, location, location is what makes something good. In deal making, what makes the right time for a deal is stability, stability, stability. And there is a belief that that happens. Now, we'll see if that plays out. But the other thing that is also really moving things forward is, you guessed it, enthusiasm around AI. It's the sort of thing where VC dollars are flowing into the space, even in a quiet year for VC. And we're already seeing some examples of deals that people are really excited about in AI. The most obvious example of this, of course, is Databricks' $1.3 billion acquisition this summer of Mosaic ML. And the last thing, of course, is the backlog. There's a dreaded backlog that's sort of been in place for a while, and deals that would have gotten done, say, 18 months ago are now being resurfaced in a lot of these conversations over the last few weeks. So the way I would explain it, Rochelle, is that deal making is sort of like making wine, right? It's both art and science, and you can have all of the tools, but if you don't have the weather, if you don't have the environment, it's going to be tough.
And much like wine, all tech is not created equally, as we've seen with Nvidia sort of off to the moon so far this year. But what sectors should we be watching within tech as deal making returns?
All tech really is not created equal, but in this case, don't look for the biggest deals. It's really easy to want to think, oh yeah, we're going to see another $69 billion deal like the Activision Microsoft deal. That's probably not on the table. Bankers are behind closed doors calling this the year of the add-on. It's going to be a year where there's going to be a lot of consolidation, a lot of folks looking for capabilities that they might not have otherwise. Basically, the reason that add-ons are kind of going to be sexy this year even is that they're easier to finance in a high-rate environment, and they're not going to run into antitrust issues, which is something that bankers are more and more talking about, even bankers who are doing deals in what's considered the middle market between $250 and $1 billion. Some key areas to call out here are cybersecurity, and to me, this is the one that I think is most prime for some really notable deals. Think about it. It's a perfect sector for deals, right? It's mission critical. It's fragmented. And we've already seen some examples of really big deals, even in tough environments. We only need to look back last year to Google's $5.4 billion acquisition of Mandiant. Otherwise, keep thinking along lines of mission critical, right? Risk and compliance, especially in a more antitrust-centric world, risk and compliance is seeing a real spike. Fintech is something that is going to be in the digital transformation theme that we hear from companies all the time still. And of course, AI. Now, be careful with AI. Remember, the VC dollars may be flowing in, but it's still far lower than what we would have seen, say, in 2017, 2018. It's also worth noting that a lot of these AI companies that folks are excited about are pre-revenue. So in the end, think about this as the year of consolidation, the year of the add-on, not the year of the mega deal.
It certainly makes sense. And as you mentioned, without trying to draw the ire of regulators, as we've seen it, antitrust regulators clearly on the prowl. Great stuff there. A big thank you there to our very own Allie Garfinkle.